Welcome to Grand Wealth Management's quarterly investment review for the first quarter of 2025. My name is Calvin Wiersma, and I'm joined today by our founder, Jeff Williams.
Yeah, no, happy to be here and talk about the first quarter and also talk about the reaction to the tariff policy and what's happening in markets now.
Yeah, quite the surprise. So let's just jump right in. So, Jeff, the first quarter was kind of a mix, but my theme that I really took away was that diversification worked. The U.S. stock market was down slightly, about a little over 4% down, but if you were an investor that owned stocks outside of the U.S., international stocks returned more than 6%, emerging markets a little over 2%, and bonds and real estate were also up.
Yeah. So I think surprise to a lot of investors who, based on the headlines, would expect their portfolios to be down significantly in the first quarter. We're surprised to see that the portfolios overall held up quite well, and that's really the power of diversification. So diversification, holding multiple asset classes in the short run, some may be down, others may be up. But if you're holding multiple assets that aren't correlated, it smooths out returns and over the long run can still deliver good returns and a smoother ride along the way.
A great example of that is if you look at the last 12 months of returns, 2024 U.S. stocks were way up. This year they're down a little bit, but if you look at the different asset classes, a lot of the returns are very similar. U.S. about 7%, international about 5%. Emerging markets 8%, and real estate is pretty close to 10% return for the last 12 months. But all of that return happened at different times, which, like you said, gives you a smoother ride, but still good results.
Yeah, and the disciplined approach of holding multiple asset classes and rebalancing does work over time.
Fun for us to see. It doesn't always happen that way.
Right.
So, I also wanted to touch on bonds. They were positive for the first quarter. And if many of our investors own a mix of both stocks and bonds, and owning that mix, if you had a typical 60% stock, 40% bond portfolio, you were actually slightly positive, despite a lot of the perhaps headlines that might indicate otherwise.
Yeah, bonds are really, holding up their end of the bargain in the portfolios, kind of the safe part of the portfolio, and have really helped hold the value of portfolios as we've seen stocks decline, and U.S. stocks in particular decline.
Yeah. Well, I do want to pivot to this past week or so because the first quarter is quickly in the rearview mirror.
Yeah. Hard to ignore the recent happenings in the market.
Right. And so with the Trump administration's announcement of really sweeping and much higher than expected tariffs, the markets have reacted by a sell-off. And if you look at the market where U.S. stocks were at the high back in the middle of February, U.S. stocks are down about 20%. Internationally, not down quite that much, but how are you talking to clients about this volatility and helping them manage through it?
Just recognize these are scary times, right? There's a lot of uncertainty. There's a lot of fear in the market. There's a lot of constant headlines that people are seeing, and just what feels like precipitous drops in the market multiple days in a row. So it is it is scary for a lot of people. And the natural reaction for any of us as humans when we have danger is to seek safety. So recognizing that the emotional response is that you really want to you want to react and do something that feels safer, and that might be moving to cash or selling out of the stock market. But we know that's not the right answer, and that in the long run, that's detrimental to portfolios. And why is that? It's really because you could move to cash, but And even if the market did move further and you avoided some losses, um, the way the market works is the market moves up just as dramatically, just as quickly as it moves down, and it does so very unexpectedly. So there's really no
Right.
way to predict when the market is going to recover. We have new news every day, and really at any moment the market could pivot and recover losses. And we know over time that missing out on the best days of the market, missing out on those recoveries, is going to do more harm than avoiding the down days. And the other point that I make is that you might temporarily feel some relief getting out of the market that you're not going to have to face those down days, but that relief is going to, I think, quickly be replaced with a different set of emotions of knowing and figuring out when to get back into the market, and then as you're missing these up days, the feeling of regret of missing the upside of the market.
Yeah.
So if you're feeling like you're wanting to relieve that stress of seeing these market drops, you may not really relieve that stress by moving out of the market.
Yeah, you get that when you start to see green again, but you maybe are not in the market, and that anxiety can be just as stressful.
Right.
For clients and investors.
Yeah, and our experience really is over time that those investors that have moved out don't get back in time.
Right.
Because again, the market generally moves well in advance, and oftentimes by the time it feels like it's safe to get back into the market is really already recovered its losses, and you really have missed out.
Just talking about how we handle anxiety, that's kind of how we frame how to make decisions, but I know we're a very data-driven firm, and just maybe speak to some of the processes that we use and do to help. When markets are volatile, what actions do we take?
Right. Yeah. Well, it's again, we do take the emotion out of it and base it on process. We also take speculation out of it. It would be nice for me to sit here and say I knew where the market was going tomorrow, up or down, or where it's going next week. The fact is that we don't know that, and we've never seen evidence that anybody else knows exactly what the market's going to do in the short run. So we control what we can, and that is rebalancing. And well, it's first of all having a plan. Right.
Yep.
So having a plan in place for every client that we can follow, and parameters around how we're going to manage the portfolio. It is rebalancing, and so that is very counterintuitive. Your reaction is to sell stocks when in times like this, but actually when stocks drop 20% and we rebalance and we buy more stocks, we're buying at a low, and at least relatively speaking. And we know that disciplined, taking gains from asset classes that do exceptionally well and buying those asset classes that haven't performed as well over time contributes to a higher return on the portfolio. And then we'd also take advantage of tax loss harvesting in accounts where we can capture gains or losses for tax purposes, but still remain invested to capture the upside. So we do end up doing a lot of trading, a lot of reviews of portfolios during these times, but it's really all part of the process.
So it's really, we're by rebalancing based on thresholds that we set, it helps us to have that discipline of buying low and selling high. And then on the tax loss harvesting side, that's how we help clients minimize taxes and increase their after-tax return. And by doing these things consistently, again, we're using data to drive this decision-making. We don't know when the market bottom might be or when things might turn around, but by doing this, it helps portfolios recover more quickly. And I just think back to March of 2020 when COVID started to shut down the world, and we had similar volatility on a daily basis for about a week or two. But one thing, again, by using our data-driven process, we were able to rebalance, I think, just about all of our client portfolios within a week of the market bottom.
Right. Yep. Yeah, we won't always catch the bottom exactly, but we did very well back
Right.
in that time frame.
And that was another great example of, as you mentioned before, some of the best returns come after the worst returns. And in that situation, we saw the market come back in almost
Fully recover within a number of months, yeah,
Right.
where most people would have thought it really took a couple of years to get out of the COVID crisis, but yeah,
Right.
markets have recovered within a few months.
right. And part of that is just, driven by change in policy and what happens there. So kind of back to your point about we don't know where markets will go. We don't know what news is going to come out or what decisions will be made that will change the outlook.
Right.
Well, thanks for joining me today.
Sure.
Thanks everyone for joining Jeff and I. Happy to talk about what has happened and kind of what is to come. But if anyone has any questions about investing here at Grand Wealth Management or financial planning, please feel free to reach out to us.